Starbucks brewed up strong results in the U.S. in the fourth quarter, but continued to struggle overseas. The company's same-store sales in China rose 5%, but showed a pullback in orders, with average ticket prices falling 3% year over year. So how will this uneven recovery impact the stock? David Wagner, who is the Aptus Capital Advisors Equity Analyst and Portfolio Manager, joins us now. David, would love to get your broad read on the bright spots for Starbucks earnings report, and we ultimately did point out there that weakness that they did see in China.
Yeah, I actually think China was a little bit better than expected, but as you just mentioned and Brooke just mentioned, this was a pretty clean beat and metrics were basically better than anticipated across the board. And then guidance came on in pretty strong, really nullifying a lot of some of those naysayers. I think that what we saw, Laxman, CEOs are cognizant of the macro situation, but they're not talking about a recession at all. I mean, you saw this stock jump after the earnings call. I think investors really welcomed the commentary actually on China, and some of the growth was better than anticipated there. But mostly from the statements around the momentum that the company continues to see, specifically in North America. You saw strength in traffic, strength in overall ticket spend, somewhat really, nullifying the bears thesis that a slowing consumer spending was going to inhibit future results. But the big focus today is actually going to be on the upcoming investor meeting this afternoon, where we should get a little bit more information on the company's annual growth targets and that new program that they have out there. But the company did reiterate on the call that their long-term EPS guidance is still 10 to 15%, revenue growth, 10 to 12% over the next year. But the big question on investors' minds, I think, were if the company could keep, that really high bar set for the comps outlook, which the company said long-term should be around 7 to 9%. But maybe this was somewhat expected. The company came out and actually guided a growth to 5 to 7%. But this shouldn't weigh on the stock too much in my mind, because my math, if you get revenue growth around 10%, that actually should equate to mid-single digit comps. And, the company still guided, revenue growth next year of 10 to 12%, albeit, Laxman said at the lower end of that range. So maybe this was more of a de-risking event for the company, as these comps should be more obtainable. So, 9% up on the stock day seems about right.
David, I know in general the economy has held up well. How do you think Starbucks is positioned if there is a recession?
Well, they're cheap indulgables in a way. It's like what you always see with like Pepsi and some of the snack products that they have out there. Obviously, the consumer and their propensity to spend has started to come down. You saw that with Visa's and MasterCard's results saying that the October trends on volume really started to slow. But all in all, the consumer still remains pretty strong. And honestly, I know it's expensive coffee for Starbucks, but it's still only maybe $5, $6 for most of these people buying a cup of coffee. So I'm not surprised that the company said that they've continued to see momentum here in the most recent month, and it really just hasn't slowed whatsoever.
David, as you think about how this company is also going to balance the ticket in multiple territories here, and especially here in the U.S., where, there was strength, but at the same time, you've got a consumer that has had to hear the word recession in one form, one conversation or another for the better part of the past year and change. And so this is typically looked at as a little luxury. Are customers, are you expecting them to push back on price? I mean, my goodness, I got a Starbucks here this morning, and I'm just sitting there like, how did this go up so much?
Same.
I mean, I'm here drinking my Folgers right now, so I might not be the target audience, but little Folgers in your cup. But that's why I'm actually a little bit more neutral on the stock. I've been very confident, or become more confident, in the company's fundamentals from an earnings outlook perspective. I mean, look at the structural margin improvement that they've had from this reinvention program. It was like 300 basis points this month. It was 100 basis points over the last year. So the fundamentals have continued to be strong, but I'm more neutral on the stock because, I mean, I have to agree with you. You have to be somewhat tempered with the expectations due to a lot of these external risk factors out there regarding the consumer, but also some macroeconomic factors in China, because they have a huge exposure there.
I mean, David, I wasn't even the target market for the Barbie Frappuccino, but yet still found myself buying it. David Wagner, Aptus Capital Advisors Equity Analyst and Portfolio Manager. David, great to get you some of your insights here on the day and reaction to Starbucks this morning.
Cheers.